This video is an Uncovered Japan company research report on CE Holdings, ticker 4320. Behind the holding company is CSI, an electronic medical record specialist serving Japan's small and mid-sized hospitals. It is a strong niche business, but the current share price also reflects a corporate control story. Four numbers frame the case. CSI has more than 950 cumulative hospital installations. Healthcare Solutions accounts for 97% of group sales. The balance sheet has roughly 3.3 billion yen of net cash. But at 34.4 times forward earnings, the market is paying far more than a routine hospital IT valuation. CSI's core product is the MIRAI's electronic medical record. It holds patient histories, medication and test orders, nursing records, and clinical workflow. For a hospital, this is not a peripheral app. Replacing it means migrating years of records, retraining staff, and accepting risk around a live care system. That is the foundation of the switching cost moat. The segment split is unusually clean. Healthcare Solutions produced 15.3 billion yen of sales, or 97% of the total, at about a 9.5% segment margin. The small marketing solutions segment is loss-making. So this is not a diversification story. Investors are mainly underwriting one focused hospital software franchise. Over 5 years, revenue grew at a 6.5% annual rate, while operating profit grew at 12.6%. The operating margin widened from 7.2 to 8.9%. This is not a hyper-growth company. The attraction is steadier, a focused niche business with operating leverage and a path toward more recurring maintenance and cloud revenue. Headline net income gives a misleading picture. Fiscal 2024 included about 450 million yen of special losses and impairments. Fiscal 2025 included an 870 million yen disposal gain from selling most of a non-core CRO subsidiary. Operating profit, by contrast, rose from 1.15 to 1.41 billion yen. For this company, operating profit and cash flow are the more honest signals. The report, base case, has revenue moving from 16.0 billion yen in fiscal 2026 to 17.4 billion in fiscal 2028. Operating profit rises from 1.65 to 1.86 billion yen, with margin reaching 10.7%. The key assumptions are recurring revenue mix, project discipline, and less drag from small loss-making activities, rather than an aggressive top-line leap. The balance sheet is a major strength. CE Holdings had roughly 3.3 billion yen of net cash and a 65.2% equity ratio. It has paired that resilience with a progressive dividend policy, a special dividend after the Micron sale, and buybacks with cancellation. The same cash-rich profile, however, also helps explain why control-minded investors have taken an interest. The macro backdrop is unusually direct. Japan's policy agenda aims for electronic medical records at essentially every medical institution by 2030, alongside electronic prescriptions and a national medical information platform. With 97% of sales in healthcare IT, CE Holdings sits directly in that demand path. Aging demographics and hospital labor shortages strengthen the case for efficiency software. The central strategic question is two-sided. Cloud and AI could make MIRAIs more useful and grow recurring revenue. But a standardized cloud EMR could also weaken the site-by-site renewal model that protects CSI today. The company's moat is real, yet its durability over the next decade depends on whether it shapes that transition rather than being shaped by it. Valuation is where the case changes character. CE Holdings has historically traded around a 13 times earnings range, once one-off gains and impairments are stripped out. The report puts the forward multiple at 34.4 times. Its closest listed hospital EMR peer, Software Service, trades around 9 times earnings, despite being larger and more profitable. The report's conclusion is balanced. CE Holdings is a quality niche healthcare IT business, with switching costs, a net cash balance sheet, and a policy tailwind. But the current price is supported by the prospect of a controlled transaction. The report's fundamental scenarios all sit below the quoted price. This is analysis, not a recommendation. The key variables to watch are operating results, cloud execution, and any formal change in control. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.